Thursday, March 7th, 2019, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about the delusion of the Federal Reserve and the great bubble it has created, especially since 1971. And to do that, I will just go through a pictorial history of the Fed's balance sheet. The Fed has gone rogue, really, the central bank. And I recommend people read G. Edward Griffin's book, The Creature from Jekyll Island, so that they don't take my word for it about the Federal Reserve, the central bank for the United States, which was created, of course, through an act of Congress in 1913 and has been operating since 1914. So Billy is back today. So before I go into the Federal Reserve and the madness of its balance sheet and all the money printing it has done, not only since 2008, but since the 1970s, I will look at what the markets are doing this morning. 10 past 8 London time. We've got spot gold just trading lower here. Right near the lows, recent lows at 1282.70. So we're down 3.5. The price of gold range has been 1289 to 1280.64. So we are off the lows. Silver has hit a low of 1501 overnight. Right now it's 1503, down $3.70. The Dow future is down 92 points at 25,585. That's down 1/3%. S&P is down 7.5 or 1/4% at 2763. The Nasdaq 100 future is down 0.4% at 7083. In terms of the currencies, they're fairly quiet. So it's surprising again to see gold and silver under pressure. But I think we know what's going on with gold and silver. The pound is 131.66, unchanged really. So is the euro, 113.08. And the dollar yen is also unchanged, 111.76. I think there is an ECB meeting today. Usually the statement and the press conference are a little later. I think the press conference starts at 8:30 a.m. New York, or 1:30 p.m. London time. That central bank as well has no clue, of course. They have negative interest rates. They've ballooned their balance sheet as well, just like the Fed. The Chinese yuan right now is, the dollar's at 671.50, unchanged. Crude oil, 56.48. That's up very slightly, and Brent is at 66.13, up about 1/4%. The bond market, let's see, the 10-year yield is at 269, so up slightly from yesterday. The madness of the Federal Reserve, and I think looking at its balance sheet, and I've got the information from greshams-law.com. You can check out that website. They don't update very often, but they have some interesting information. First of all, let's have a look at where the balance sheet is right now. It hit a top at 4.4 trillion. You can see here on the bottom right-hand side of this factors affecting reserve balances. This is the Fed's balance. It's 4.021 trillion right now. Bottom right-hand side. So it has gone down about 10%, and they're still going to keep, how can I say, letting the balance sheet roll off. They're not going to add on to it. All the securities that are going to mature, they're not going to buy new ones. So it's going to drop a bit. We don't know to what level, but not that much lower. I think they're going to stop quantitative tightening, which is the opposite of QE, of course. So now let's have a look. Gresham's Law chart is only up to 2012. But you can see here, I mean, how mad the Federal Reserve has actually been getting, especially since the 60s, and then especially also since Richard Nixon closed the gold window. It says there, Nixon shock, Bretton Woods system collapses. The dollar is unleashed from gold. So for those of you who think gold is antiquated, gold can't keep a modern monetary system, wake up, because all throughout most of the 20th century, gold was very important to the system, and the United States did very well. The United States was the biggest creditor nation right after World War II, and in the 50s and 60s, the economy was doing great, and the U.S. was under gold. I listened to Dave Stockman. He gave an interview a few weeks ago at Fox Business, and he was talking about how the Fed's balance sheet was around 200 billion when Greenspan came in 1987, and that after the crash in October 87, when actually he noted that 10-year yields had gone up to 11% then, he noted how the Fed just went berserk with its balance sheet. And so what I'm trying to say, yes, the quantitative easing programs begins, they say here, but they've been doing quantitative easing ever since the U.S. went off the gold standard, the U.S. Treasury. So it's just that after 2008, it was more extreme. The Fed became extreme. So right in this chart, you can see it's just below 3 trillion. And so now this chart is up to like 4 trillion right now, and it went up to 4.4 trillion. Some at the Federal Reserve have said that with QT, or draining the balance sheet, it will be like watching paint dry. But we saw what the markets did last year up until Christmas Eve, that it isn't like watching paint dry when the United States is running huge deficits. We just saw the other day official data, so, the deficit is increasing ever more. The United States Treasury is paying almost 600 billion just to pay the interest on the debt, and that's expected to be $1 trillion in a few years' time. So it's mad, but I want to go through the history of the Fed's balance sheet just to show you how they've used the wars and crisis as an excuse to usurp the Constitution, to increase the power of the central bank, and basically increase the size of government, make people more dependent, increase the debt. I was watching also a video the other day from Victor Sperandio. He gave I think it was about 2012. He gave us a talk about hyperinflation, and he noted how back in 1901, the size of the U.S. government was only 3% of GDP. Federal, state, local, county, altogether was only 3% of GDP, and now now it's like almost 40% or something like that, and it's just crazy. And the Federal Reserve has allowed that, and I'll show you how historically it has evolved the Fed's balance sheet. So we'll go from the beginning, and I took these charts from Gresham's-law.com. So the first one here, 1915 to 1925. You see the yellow, the biggest asset here in the beginning, the yellow, is gold reserves. And it says here, bills discounted and loans explode due to the abandonment of the Fed's original real bills policy of exclusively making discounts on short-term commercial paper. From 1917 onwards, the Fed was able to make discounts on government debt. And I think, well, look at the date, 1917, the U.S. entered World War I. That was the excuse. And I think even that was breaking the rules, because they're not supposed to do that. Eventually, I think in 1935, there was a law that was passed, banking law, that basically put that into into the books. But you can see how they used the war to start really financing the government. And that's when the road to perdition started. The national debt started increasing. And also at the bottom it says, law passed to force banking institutions. Well, that was in 1917 as well. Law passed to force banking institutions to keep required reserves at the Federal Reserve banks. So I think that's another, how can I say, infringement of property rights by the government there. And they used war as an excuse as well. 1925 to 1935. I guess we can see why as well. We had the Roaring '20s, all the liquidity, all the changes to the banking system via the Federal Reserve created this bubble. So what does it say here? Well, it's more towards the end of the period. It says domestic gold holdings banned and exports of gold banned. And then it says gold debased. I think they should have said gold revalued from $20.67 an ounce to 35 an ounce. I mean, it was the dollar, the Federal Reserve note that was debased, not gold. They got that wrong there, but it doesn't really matter. So you can see how that led to the increase of the balance sheet of the Federal Reserve in terms of gold value. See, the balance sheet went from just over 5 billion, because we're talking billions here, not trillions, to about 8 billion. And the gold reserves as well went up to about 5 billion. They had to do that, or else the percentage of gold reserves wouldn't have been enough. I think the Fed still had some kind of statutory rules it had to follow in terms of how much gold it had to hold. Now, an interesting period, 1935 to 1945. This was a period when the balance sheet increased a lot as well, as you can see here. Went from around 8 billion. Even before the war, it was already over 20 billion. And then with the war, of course, it went all the way to 40 billion. Again, war giving the excuse, giving the Fed carte blanche. The Fed institutes a policy of purchasing government T-bills at 0.35% to finance World War II. So more QE, more artificial rates. So what we're seeing now is nothing new, just more extreme. And it says here, free from the burden of domestic redeemability and aided by the devaluation and the Gold Reserve Act that was in 1934, the Fed's balance sheet expands relentlessly. So there we go. Post-war, 1950s, 45 to 1955, it was a pretty stable period. And it's interesting that it was a very good period for the U.S. economy, very prosperous. The baby boomers, that's when the baby boomer generation was born. People came back from the war. And notice how the balance sheet actually is fairly steady. From 40 billion, well, yeah, of course, yeah, it got up to 50 billion, but gold reserves pretty steady. Policy of pegging long-term government bonds at 2.5% abandoned. So the Federal Reserve was keeping interest rates artificially low since World War II, and they abandoned that. And that's what it says. So just goes to show you how very stable period for the Fed's balance sheet post-World War II to 1955. Now, 1955 to 1965, and we're starting to see, the Fed's gold reserves start to decline here. So from over 20 billion to just below 20 billion, and the balance sheet continuing to creep up. Even though it's nothing like nowadays, it went from just over 50 billion to below 60 billion. So, but gold, it says international dollar reserves redeemed for gold at 35 an ounce, causing a progressive drain on the Fed's reserve of gold. Well, I guess that's when the United States started running current account deficits. So 65 to 75. I mean, this is when gold continues to be drained away from the balance sheet. You can see there this period, and you've got the Great Society spending, the Vietnam War, and the balance sheet kind of starts exploding from around 60 billion to just over 100 billion. A Smithsonian agreement, 1973, I think, fails and rates are allowed to float freely. So that's when the floating rate fiat currency exchange worldwide started. That's when London, the city of London, started growing because it's a center of foreign exchange trading. And of course there, Nixon removes the dollar's convertibility into gold, but attempts to maintain a constant rate via the Smithsonian Agreement. So that didn't work out. Trying to keep off gold, but keep fixed exchange rates. 75 to 85. Well, there you see gold stabilized because they closed the gold window. But the balance sheet continues to increase, almost to 200 billion. Paul Volcker hikes rates from 11 to 12 over a weekend. The task of promoting stable prices and maximum employment bestowed upon the Fed. This is where Dave Stockman was talking about that Greenspan came in and then really started printing money and increasing the balance sheet. And yeah, you can see here stock market crash. You can see how the balance sheet starts growing. Mexican peso tequila crisis. So now we're almost up to we're up to 450 billion. What's the orange? Short-term U.S. government securities, long-term U.S. government securities, the blue line, and all other assets. And you can see gold. Gold is still being valued at $42.22 there, and it still is today. I'm not sure why they do that. Maybe just to make people forget about gold, maybe how important it is. And we saw that in the post-war era, the first 10 years after the war, how it worked really well. And it was still 40% of the balance sheet. 95 to 2005. So there you go again. Y2K, they used that as an excuse as well to inflate the balance sheet even more, almost up to 700. Now we're talking, billion still, the 9/11, but still we're seeing, the increase, even the long-term government securities. So those people who say, the Fed's only been doing QE since 2008. No, they've been doing QE forever. They've been printing money, and that's one of the reasons why they've been able to keep interest rates from going higher since Greenspan. When he started out, the balance sheet was at 200 billion, and now we're at 4 trillion. So yeah, they can try to normalize that balance sheet, but interest rates are going to go through the roof if they do. This is the latest period here now. That's it only goes to 2012. Gresham's-law.com, but this will do the job. So it says central bank liquidity swaps, term auction credit, and other liquidity items explode. Lehman files for bankruptcy. So you can see how the balance sheet just went through the roof there from I think it was 800 billion just before the Lehman collapse, and then now we are around 4 trillion. So QE1, QE2, I think there's Operation Twist, and then QE3. So there you go. And now you can't even see gold. Of course, it's still valued at $42. If they valued it at $1,300, for example, it would be right now, I calculated, about 300 billion, or about 8% of the balance sheet. Up until I think the 50s and 60s, the statute was that it should be 40% of balance sheet. So I guess if you did the maths and we go back to that, the price of gold would have to be about $6,000. So there you have it. The Fed, it's been going rogue for a long time. It's been printing money and keeping interest rates artificially low, especially since 1987 and Greenspan. Yes, we've had QE, but it's just been a more extreme QE since the crisis. But they've been doing it forever, money printing to monetize government debt and to allow the government to grow, to allow the banking institutions to get richer and richer, and to allow the corporate America to benefit from wars. And they've used wars and crisis as an excuse to usurp the Constitution. Victor Sperandio, in his speech, that I'll put a link to this video up in the cards and below, he talks about how the executive order that FDR used to, how can I say, confiscate American gold actually was unconstitutional. And there were cases brought against the Supreme Court, but the Supreme Court decided not to look into it. So there you go. If you enjoyed this video, make sure you hit the like button, share it far and wide, subscribe to my channel if you haven't yet. And you can also get notified of my videos by hitting the little bell above. And you can also follow me on Steemit, DTube, and on Twitter. I wish you all a great day. Take care. Bye.